If you're a business owner and you have been watching this whole tax strike conversation blow up and you're thinking, I'm paying way too much and none of this feels fair, I get it. But I need to say this clearly. A tax strike will not punish the system. It'll punish you. And in the next few minutes, I'm going to show you what actually gives you control legally without creating IRS problems. This is for business owners who are frustrated but also smart enough to know you cannot afford a mistake. I'm not going to tell you to stop paying taxes, but I'm going to show you how successful owners stop overpaying by using structure and planning the way the tax code actually rewards. Stay with me because I'm going to give you the framework that changes everything. I've worked with hundreds of business owners over the years, and I have noticed a pattern. Whenever tax frustration hits a peak like this, smart and successful people start making emotional decisions inside a system that does not care about emotion. And those decisions usually come back very expensive. To understand why this is happening right now, we need to talk about where this anger is actually coming from. The tax strike or tax boycott conversation did not appear out of nowhere. It started picking up in late 2025 after a few high-profile fraud stories went viral, including the Minnesota daycare situation where millions of tax dollars were grossly misused. But for most business owners, the story was just the trigger. The real issue is trust. When you are a business owner, taxes do not quietly disappear from a paycheck the way they do for W-2 employees. You see everything: quarterly estimates, payroll taxes, sales tax, state tax, federal taxes. And when you actually add it all up, a lot of successful owners are not losing 30% of what they make, they're losing half, sometimes more. So this is not about people refusing to contribute. It's about people feeling they have zero control over where their money goes. And when people feel powerless, they start looking for extreme solutions. And that is where things get dangerous. The next part matters more than people realize. As a business owner, taxes do not feel like shared responsibility. They can start to feel like a punishment for being successful. As your revenue grows, your tax bill grows faster than your sense of security. And unlike employees who have taxes taken out of their paycheck automatically, there's no buffer and no middleman. You write the checks, you feel the pain every single quarter. Now, layer that on top of everything else right now: AI uncertainty, economic pressure, political noise, constant headlines about waste and fraud. At some point, frustration turns personal. And once frustration turns personal, people start making decisions that feel satisfying in the moment, but incredibly costly later. That brings us to the biggest misconceptions driving this whole tax strike idea. I'm not here to tell you your feelings are not valid, because they are, but acting on them without understanding the risks is where people get hurt. So let me break down the 3 myths that create really expensive problems. Let me start with the first myth: if enough people do this, enforcement will break. I hear this a lot, and it is just not how the IRS works. The IRS does not enforce taxes in waves or movement. They enforce them with one person and one business at a time. About 2 to 4% of businesses get audited every year, and then they're selected through system data mismatches and random sampling. Online outreach does not change any of that. A movement will not protect you, period. The next misunderstanding is where people get themselves in even more troubles. Not paying is a form of protest. And here's the thing: the IRS does not see protests. They see compliance or non-compliance. If you're in compliance, you file and pay correctly. If you're not, penalties and interest start stacking up fast. Your intention does not matter. Your frustration does not matter. The system only responds to numbers and timelines. That's it. And ironically, the more emotional someone gets about taxes, the more expensive their situations usually becomes. And the last one is the most dangerous. I already do write-offs, so I'm covered. This one quietly costs business owners tens of thousands of dollars a year. Write-offs are basic. They might save you 5%, maybe 10% if you're lucky. That is not real planning. That is the bare minimum. The big savings, especially for million-dollar businesses, come from strategy that happens long before deductions ever show up on a tax return. So if rebellion does not create control, what actually does? Here's the real shift. The most successful business owners that I work with do not win by fighting the tax system emotionally, not because the system is always fair. Let's be honest, it is not always fair. They do it because emotion is expensive. What taxes actually reward is structure, planning, and businesses that are designed with intention. So instead of asking, how do I fight this? Smarter question is, how do I design my business to work inside the rules? Because the system is not changing fast enough to protect your business. Control comes from understanding how you show up inside it. Now, let us talk about the levers that actually create that control. control, not gimmicks, not loopholes, levers. First, you cannot have a sustainable business foundation with a bad structure. So we start with structural control. Most million-dollar business owners are taxed like highly paid employees for one simple reason. Their business outgrew their setup, but they never upgraded it. So they have the wrong entity for their income level. They have the wrong payroll strategy, and they have no plan beyond. We'll see what happens at tax time. Meanwhile, the wealthiest people legally pay less, not because they cheat, but because their structure is intentional. And when this lever is wrong, you can bleed 5 figures a year without even noticing. Then we build planned spending because deductions only work when decisions are intentional. Especially under $3 million in revenue, spending is usually emotional. It's not a plan, it's a reaction. And when spending is reactive, deductions do not feel like a strategy. They feel like chaos. But when spending is planned, deductions start working for you, not against you. Once spending is under control, timing becomes essential. Timing is one of the most overlooked tax advantages because when income hit and when expenses hit can completely change your tax outcome, even if your profit is the same. This is why deferring income, accelerating expenses, and using the time value of money can create real relief fast. But timing only works when it is designed with everything else. And that brings us to level 4, design over tricks. And here's the truth no one wants to hear. There's no single trick that fixes taxes. The biggest savings come from stacking a bunch of small correct decisions over time. Planning beats shortcuts. Design beats reaction. And this is not theory. Let me show you what it looks like in real life. I work with 2 owners who ran a consulting company. They were doing over $2 million a year in 2019, and on paper they looked like a very successful business. But behind the scenes, it was messy books, weak structures, and zero planning. Over time, we cleaned up their numbers, we fixed their structure, and we built system around spending and timing so decisions were not emotional anymore. They scaled from $2 million to $40 million a year, and because their planning matured with them, their tax burden dropped dramatically. Revenue went up 20 times, and tax burden went down. They reinvested the savings, scaled faster, and eventually sold the business with exit planning done the right way. They did not stop paying taxes, they stopped overpaying. And that is the difference between reacting loudly and building quietly. Feeling frustrated about taxes does not make you irresponsible, but reacting emotionally inside the tax system will cost you. The business owners who win long-term do not fight the system. They understand it, design within it, and move forward with confidence. If you want a full breakdown of how million-dollar business owners legally cut $50,000 to $100,000 off their tax bills without risking penalties, watch this video linked here.